We welcome back a guest who needs no introduction, but we're going to give him one anyway. Welcome back for the sixth time, Cullen Roche, economist, author, father, and founder and chief investment officer of the Discipline Funds, a low-fee advisory firm. Cullen, how are you?
I'm doing great. Thanks for having me, guys. I'll try not to make this six times too many.
That is not going to be the case. We love talking with you. We've got a very timely topic, tariffs and the economic impact of tariffs. But Colin, you wrote recently, in retrospect, I have to say that the last 6 weeks seems like a bad dream. There will be a lot of noise from both sides about who won or lost all of this and who caved. But I don't think anyone won or showered themselves in glory. The USA didn't really get anything meaningful from China or the UK in these first few agreements. And the effective tariff rate is meaningfully higher, so US consumers are worse off in the end. Many countries, rightly or wrongly, responded to the US tariffs the exact wrong way by retaliating. Milton Friedman taught us decades ago not to retaliate to tariffs. So, as tariffs typically do, it just resulted in us all throwing rocks in our own ports and then portraying it as a win for rock throwing. Nobody won anything here in the end. Cullen, we are recording on Friday, May 16th, 2025. Where are we now? Where do you see this going?
Well, we're in a much, much better place than we were just 6 weeks ago, in large part because everybody has, to a large degree, sort of stood down from where we were. I mean, things had escalated to the point where when we had the 145% tariff in place on China, that was effectively an embargo between the two countries. And so neither country was really going to be doing a lot of trading. And that's obviously I mean, it's 13, China's roughly 13% of all US imports. So they're not our only trading partner, but I mean, in terms of an economic multiplier effect, they're probably our most important trading partner because they're the ones that we do source most of our cheap goods from, and this kind of ties into all this in a really important way. China is the provider of a lot of the most important necessities, things like clothing and household goods this is one of the things that's been very frustrating about the tariff aspect is that the necessities we import from places like China or Vietnam or Malaysia or a lot of these sort of low wage Asian countries are their necessities that the really the poor and the middle class rely on the most heavily. So when we impose a tariff, the people you're really hurting the most through, especially through the China avenue, are the households that can least afford to bear the brunt of this. And so, from a very basic perspective, I mean, this whole thing's been sort of frustrating for me, in large part because this has never been a very controversial topic in economics. It's one of the few topics that virtually all economists agree about because tariffs are effectively a tax that you impose on your own country, trying to hurt the foreign country. But what really ends up happening is that it's sort of like putting a gun in your own mouth when you're arguing with your wife because you feel like she's got the upper hand in an argument. And that tactic may work, but it's not a reasonable way to debate or negotiate with anybody because the outcome obviously is not a good one if you're serious about it. And so that's what tariffs kind of do is tariffs are this tax that the government imposes on the foreign imports, but they're paid by domestic importers. So the corporation that imports the goods pays the tariff fee. This is recorded as custom duties. You can look this up in the daily treasury statement. You can look it up in the monthly statement. And it gets recorded as customs duties. And those are paid primarily by US corporations. And one thing that's frustrating about that is that the corporation is not really the entity that's going to end up paying the tax ultimately. The corporations, for the most part, they try to pass on their costs as much as they can, and especially with taxes, they when they impose or get imposed with a this customs duty, they will then try to pass on that cost to maintain their margins. And so I always tell people that one of three avenues pays this tariff tax, and it's either a the well primarily the consumer. They'll be the first one that they try to pass this on to, and if corporations can't pass that on, then they'll try to pass it on to labor. You'll get lower wages, you'll get lower employment, or the last avenue is it'll hurt margins, which effectively hurts shareholders, and that means shareholders eat it. So the corporation isn't really the entity that ever pays this. And so when we imposed these huge tariffs, we were moving from a position where, to give people sort of perspective on this, we had roughly a 2.5% tariff rate coming into the year. That was the effective total tariff rate. And so the math on that, just to put real figures to this, is that was about $85 billion of taxes last year at the federal level. So doesn't sound like a big number, but the US government collected $815 billion in taxes in April. Okay, so we're talking about a relative drop in the bucket in terms of the amount of tariff that actually comprise federal tax revenue. And what we've done, well, when we imposed the huge tariffs on China, not only were you imposing an effective embargo on the two economies and trade between them, but you were getting to what was going to be pretty close to like $1 trillion tax overall in terms of the total customs duties that were going to be imposed at that sort of a level. And that's a gigantic tax increase. It's a very meaningful tax increase. So um where we're at now is everybody has stood down. It looks like we have, there's still not a lot of clarity on where we're going to end up here, but it looks like where we're going to end up. Trump has said that the 10% baseline tariff seems to be something that he's very firm about. So at a minimum, we're going to move to a 10% baseline with we announced this week that there was going to be a 30% tariff rate on China. So we're moving from 145% down to 30, which is a vast improvement, but 30 is still a pretty big number. So that gets us probably, when you average this out across all of the relative trade, you probably get to a number that's like it's between 10 and 15%. I don't know where we're going to end up. I estimate that it's like 12.6% right now. Some other analysts, like the Yale Budget Lab, does a good analysis of this every week. They're at 17% right now, but that's assuming that all the other rates don't come down closer to 10. I'm assuming that the rates on Europe and all these other countries will come down closer to 10% or so. So we don't really know where this is going to end up, but even in this scenario, this is still the equivalent of about a $300 billion to $500 billion tax increase on what will ultimately be either domestic consumers or domestic firms. So that's kind of compared to where we were coming into the year with $85 billion, you're going to have a tax increase of something in the magnitude of an extra $300 to $500 billion.
Well, Walmart just announced tariff-related price increases. Amazon was dissuaded from itemizing tariff cost on sales. Apple is reportedly trying to raise prices without blaming tariffs. I mean, there's gonna be an effect. You say we're in a better
Yeah.
place, but there is still gonna be some damage to the consumer, wouldn't you say?
For sure. I mean, we're in this sort of strange period right now because like we got a CPI report, so consumer price index report, and a producer price index report yesterday, and there wasn't a lot of signs of any of this in it. And a lot of people will look at this so far and say, aha, there's been no effect of this so far. And that's in large part because a lot of this is just people front running things to some degree, guessing about where this will all end up because nobody really knows where it will all end up. And so we haven't really seen an actual implementation of this yet. That's the other thing that's sort of tricky about this is that with the 90-day freeze that was implemented in the middle of April, we're not really imposing tariffs yet on anybody. or at least not to a meaningful degree. So the the increase in last month's tariff rate, I think it went to like the annualized rate would be like $180 billion. So we're talking about right now, we've gone up to something that is roughly double the size of last year's total tariff revenue. And ultimately, that number will get up to, like I said, probably like $500 billion a year potentially. So it could be more than that. Who knows? But we that hasn't actually started to hit yet. I mean, last month's number was, it was 1 month of that 180. It was like $16 billion just last month. So the number is, I don't want to downplay billions of dollars, but the numbers are not big yet. We haven't actually seen a flow through of the tariffs into corporate balance sheets and income statements yet. And so there's not a lot for them to pass on just yet because the tariffs haven't really started yet. So the tariffs won't really start until, this 90-day freeze ends. And so we'll see ultimately where this all ends up. But when we do actually start imposing those tariffs, there is going to be a tax bill that comes due. And at that point, that's the point where firms are then going to have certainty and clarity over, okay, this is exactly how much this is costing us and how much we have to try to pass on. And then that's the other tricky thing is there's this whole question of, well, can consumers even eat that sort of a cost increase right now? So who is going to ultimately eat this? Is it going to be the labor market? Is it going to be the stock market? Is it going to be the consumers? And we don't really know. My guess is it's going to be some mixture of all three of those. But right now, we don't really know what the end game is. But one thing that's, I think, fairly certain, and one of the main reasons why I think it looks like the government has backed down in the last few weeks is because I think people are realizing that, there was this narrative going on. This whole thing has been, I have to say, surrounded by some of the very worst, most misunderstood narratives that I have ever seen possibly in my career. The justifications for this seem to be, I felt like I was playing a game of whack-a-mole with people sometimes where it was like bad narrative after bad narrative. And it's been this cascading effect of virtual excuses to justify this, where it was the original one was, well, China's paying for this. And it's like, well, China could indirectly pay for this in the sense that they could be impacted by it, but China does not pay the tariff. And so a lot of this seemed to stem from very fundamental misunderstandings of how tariffs work in the first place. And then the narratives evolved into, well, now it's Main Street's turn, and that's ironic because this one hurts Main Street more than it hurts Wall Street. And the narrative evolved into this is going to replace the income tax, and the math on that doesn't even come remotely close to working. So it's been this series of sort of bad narratives after bad narratives, I think, used to justify what was ultimately a mistake. It was a mistake to come out and say that these tariffs needed to be as high as they were, and we had to backpedal out of it. And the U.S. government wasn't the only party at fault here. I mean, like you said in the intro, the the way economists learn about tariffs is if another country is implementing tariffs, you don't retaliate. And so a lot of people will ask the question, well, if other countries impose tariffs, then why can't we do it? And the answer is because we've always had the sharpest economists on foreign trade. And it's interesting, this topic is so fascinating because if you talk to somebody like Paul Krugman, who is very far left, or if Milton Friedman were still alive today, Milton Friedman is probably the most famous American conservative economist that ever lived. These two would agree on almost every aspect of this debate. And they would say never retaliate. And our economists have always understood that. That's why we've never retaliated, or we've always retaliated. If we did, it was always in very specialized circumstances. But for the most part, Americans have not retaliated about tariffs because we've always known, well, if you want to throw rocks in your own port, go for it. We don't care. We'll find other trade partners. We're not going to throw rocks in our ports just because you did in yours. So, and we've always known that. And it's ironic because I think that's one of the things that's treated us really well is that we've always kept our markets freer, more open. And the U.S. economy has just I mean, there are lots of problems in our economy, and I don't want to downplay any of the problems, but for the most part, the last 40 to 50 years during which the free trade system has been in place, it has demonstrably benefited the United States more so than virtually any other economy. I mean, you can look at almost any economic metric, and we outperform other economies by a huge margin. And I'm kind of convinced that most of this debate really comes down to an inequality issue, that people are frustrated about inequality. And although free trade probably had like a tangential impact on that, I think that domestic tax and regulatory issues had a vastly more significant impact on domestic inequality than the free trade system did. And so I think a lot of this is, again, getting causality wrong, where we're now implementing this prescription to try to fix a problem that wasn't caused by free trade in the first place. So it's the whole thing is very frustrating for me because I think that it was implemented in a bad way. It was implemented using a literal mathematical error. So when they did the actual tariff numbers, it came out after the fact that they had sourced this paper in which they misunderstood the math on it. So they misunderstood this multiplier effect in the math from the original author, and then imposed numbers that were, I mean, outrageously huge, way bigger than the actual author of that paper would have ever advised. And it was because they misunderstood the math behind it. And so all of this resulted in them ultimately having to walk it back a little bit. And so it's just been, the whole thing's been frustrating because it's all been based on seeming misunderstandings that were then, responded to with a series of narratives that were wrong or partially right, but largely wrong, or just based on the wrong causality. So, I could go on for days and days about the errors in all of this, but it's we're in a much better place than we were now, although there's still a lot of uncertainty out there.
Well, Colin, this is a great segue to talk briefly about another piece of writing you did called From an Autopsy of American Exceptionalism. And I will say this was written when things were grimmer, I would say, on April 21st. But I fancy myself somewhat as a writer, and I found this pretty impressive. So I'm just going to read you a paragraph and then get your response, and then I'll hand it over to Scott. Okay, so this is written again, April 21st of this year. I'm writing this in a Parisian cafe in the year 2050. I'm doing a reverse Hemingway, trying to become a better writer as I get into my 70s, while I do part-time consulting in what has, to my surprise, become the center of the Western financial world. Unfortunately, my writing is also doing a reverse Hemingway in terms of quality. Not that it was ever close to begin with. I always loved sitting on these porches sipping coffee for hours, paying in dollars that made everything in Europe feel so inexpensive. But it's not the same these days. You won't believe how expensive this miniature coffee is, with the euro now trading at $1.90 to the US dollar. What I what a mighty currency it once was. I remember living in Southern California during the heyday of what we called American exceptionalism. It was an unbelievable period of prosperity for Americans, but it was also a period of great social strife. Wow. Talk about writing this piece.
Um, so my mother-in-law lives in Paris. So I have sort of a love affair with Paris, because we visit her a lot, and she was her family was a World War II family.
Mm.
So she grew up there, moved back to the States, birthed her daughter, who I'm now married to. Luckily, met her in DC in college, and we moved back to California. But yeah, I always loved going to Paris and sitting, in these Parisian cafes, either drinking a beer or drinking a coffee. And it's amazing paying in dollars because for the last 10 years, we've just watched the dollar become stronger and stronger and stronger over time. And so going to Europe has always been so great because the dollar is so strong over there on a relative basis. And it feels like, it doesn't just feel like vacation. It feels like a discount. economically in so many ways. And so what I did here was I was envisioning, like, what are we doing? Because over the last, 30, 40 years, this thing that we call American exceptionalism is largely the factor of the way that we grew into being the world's reserve currency. And I think that reserve currency status is something that a lot of people sort of misunderstand, in the sense that the reason we're the reserve currency is not because of a lot of people say it's our military, or agreements we made with Saudi Arabia over oil and things like that. And that's not really, those play a factor, obviously, but the real causality there is that we have the most innovative, valuable corporations in the world. And that's been the real story of the last 30 to 40 years, is that we're the leaders across so many aspects of the innovative aspect of the way that human beings have developed over the last 50 years. For whatever reason, Americans just have this innovative and creativity that has surpassed, in sort of, in a lot of ways, blown away the rest of the world. And that's reflected in the data again, where you see that our corporations are just, we have 300 million people out of 8 billion on the planet, and we're 60% of the global market cap when you look at total stock market capitalization. Like, our corporations are just unfathomably valuable. And that's attributed to the fact that these corporations are just incredibly innovative. We make, there's this narrative that we don't make a lot of stuff. But the manufacturing sector in the US economy alone is $2.5 trillion. That's bigger than the entire Canadian economy. So this one small sector, even though it has become a smaller piece of the United States economy over time, it is still gigantic. But I think that the other thing that a lot of people misunderstand about this is that a lot of our transformation over the last 60 years is that we've transformed into really, like, in a lot of ways, a tech and services economy, where the intellectual property and the way that we do things, the way we operate as sort of the front office of the world in a lot of ways, is just incredibly efficient and incredibly valuable. And the structure we bring to the way that we build our own economy, and how diverse it's become over time, has been accretive to the US economy in so many ways. And so the story there, though, is that the real story of American exceptionalism is that there has been real fundamental empirical improvement in the US economy over the course of the last 50 years. And unfortunately, this hasn't accrued to everybody equally, so alluding to that inequality issue again, that this, I think, inequality issue has been sort of the most important domestic issue. But it's interesting thinking of this on a global basis, because the median American is in the top 10% of global wealth. So there's domestic inequality within the US economy, but the inequality between Americans and the rest of the world is even larger. And I think a lot of Americans don't appreciate what a real poor country looks like in this world. And so when you talk about American exceptionalism, it is the story of we have outperformed. And when you become more protectionist, what you're doing is you're reducing competition in the domestic economy in a way where we're essentially trying to roll back some of that exceptionalism. And that might benefit our domestic economy in certain ways, but what it will ultimately do is it will reduce the relative exceptionalism between the United States and the rest of the world. And that's sort of the worst case scenario with this sort of protectionist mentality, is that you push away countries like China and Vietnam and Europe in such a way where you're no longer outsourcing what economists call our comparative advantage, and you're trying to source it all domestically. And that's problematic in the sense that we Americans, if you think of America as sort of the front office of the global economy, well, now, rather than outsourcing part of the factory floor to Vietnam, where the Vietnamese might more efficiently be able to do this, and we might be able to utilize our domestic skills in a more efficient manner, we're now going to try to do that. And you're going to take the Cullen Roaches of the world, and you're going to put me on a factory floor. This is one of the biggest ironies of this whole thing was it was like, there was this narrative going around about how we're gonna have Americans working back in factories. And then there was this poll that came out that said, how many people support bringing factories back to the United States? And it was something like 75%. And then the next question was, how many Americans want to work in a factory? And it was something like 5%. And, I get it. Like, I would love to bring back manufacturing, but that's a whole other misunderstanding in all of this, where manufacturing has gone away in large part because we've automated it away. I mean, robots and technology have just made manufacturing a smaller and smaller piece of the labor pie. And that's another interesting thing is this is happening around the whole world. It's happening in China too. Automation is killing their manufacturing jobs. So there's no bringing these jobs back in the first place. And so that's kind of one of the interesting things here is that, and this is all, in my opinion, it's going to get much, much worse. I mean, AI and robotics, like I worry about the next recession in large part because in each of the last four recessions, you've seen a big decline in manufacturing jobs because what happens is these firms during a recession, you get a slowdown and these firms fire, let's just say 20% of their workforce. And what they realize is they come out of it, they come into the recovery and they realize, well, wait a minute, we've got all this technology now and all these improvements in our efficiencies due to technology in the last 10 years that we didn't maybe realize they were as good as they are, as efficient as they are. We're not going to hire back the full 20% that we fire. We're going to hire back 10%. And that's a big story that's part of this, that the long-term trend has gotten worse and worse with manufacturing in large part because firms, every time they start slicing their workforce, they realize this. And I do worry. I worry with AI and robotics, then what will the next recession do where when these firms, even these big services firms, when they fire, 10% of their workforce during the next recession and they're then rebounding and growing their employment again, what's going to happen? How many of those jobs are they going to bring back? And I think that with AI, there's a real possibility that they will bring back, less than half of what they fired. And I think that that trend is something this is going to become a secularly embedded trend in the economy that you're not bringing those jobs back. And so this is just sort of a bad economic goal from the outset. So, but from this perspective of exceptionalism, when you're doing all of this sort of protectionist stuff, you create an environment where the rest of the world then is going to look at the Americans and say, all right, you don't want to do business with us? That's fine. We don't want to do business with you either. And then you've got, China is going to start becoming increasingly exceptional because they're going to outsource their comparative advantage with a whole bunch of other countries. And this is literally the way they're responding too. They're reaching out to all their trading partners in Asia and they're saying, for a few weeks there, they were saying, if you do business with the Americans, then we're going to nuke our deals with you. And so they were all coalescing around each other, becoming increasingly sort of, protected or protectionist of their own sort of regional economies in a way that it was isolating us even more. And the worry there is that you create this world where the rest of the world kind of teams up and they become, they're all working in this more relative free trade system of their own, where the Americans have somehow rejected the free trade world and we're not outsourcing our comparative advantage in the most efficient ways, where yeah, we're still going to be exceptional in lots of ways. I don't doubt for a second that the Americans will continue to be innovative and creative in the ways that we've always been, but we won't be able to outsource these things in the efficient ways that we have, and on a relative basis that ends up hurting us in the long run. And so yeah, I wrote that piece in sort of an excessively gloomy environment from a month ago, but it's a it's a mentality that is dangerous because we could find ourselves in a world in 25 or 30 years where if we do become hyper protectionist to some degree, we find ourselves with a much weaker relative currency. We find ourselves with less valuable corporations relative to the rest of the world, and our standing on an absolute basis, I'm sure will still be very strong. because the U.S. economy and the U.S. military, everything about us is on a relative basis, we're so much stronger than most of these other economies in the world that it's hard to see us getting knocked down too far. But it is not remotely unreasonable to assume that, I mean, God, if I were the Chinese right now, I would be, they won't do this, but I would be moving to a much more free trade position because if I'm thinking long term here, I'm thinking, God, this is a great, great environment for us to just start eating the Americans' lunch in so many different ways where we could easily become, you could be talking about Chinese exceptionalism in 25 or 30 years easily, just because they have the people and the ability to really become an exceptional economy where they could easily be. I could easily see a scenario where their economy is 2 times larger. The renminbi is suddenly becoming a trustworthy currency that is thought of as a global reserve currency by many countries. I mean, Europe is really the country or the region that whose response was the most interesting from all this because in some ways the I sort of think of the Europeans as sort of like they've been resting on their laurels for the last 50 years to some degree. They obviously were for a long time the mightiest region in the world, and they I think in some ways they sort of got lazy. Sorry to any European listeners, but and this kind of woke them up in a lot of ways. They rallied around each other. They started a huge fiscal policy. They're spending more on their military now than they ever have, and so they've had a really interesting response to this. Where did we just light a fire under their butts? Where they're now gonna wake up from this slumber and say, you know what? We're going to become the leaders of the free trade world since the Americans are dropping the baton on this. So there's some interesting macro trends that could result from all this that I think don't favor us.
Colin, I loved that piece as well. It was very interesting, and it was kind of written in the middle of the darkest period when we were all like, "How long are they gonna?" Everybody knew that those tariffs were going to be rolled back. There's not a person. Well, okay, I won't say everybody, but everybody who knows anything about economics knew that those tariffs were going to get rolled back.
Yeah,
We just didn't know when. And the longer they stayed in place, the more damage that was going to be done. And I think that's where people like you and me, Dan, we're starting to get a little fearful. Honestly, I mean, I was because like these things have to go away. We're not prepared for we can't just start manufacturing. We don't have
yeah,
the infrastructure. We don't have the people. We don't have the. I mean, the machines had tariffs that we need. The machines that we need to produce the stuff that we need to produce had tariffs of 145% on them. It's crazy. But I want to go back to one of the misconceptions that is really driving this, and that is trade deficits. There is this narrative that continues to go around, and you had mentioned comparative advantage. This plays into it. Trade deficits are somehow taking advantage of one nation that has a trade deficit with another nation is somehow being taken advantage of. If a nation sells more goods to the U.S. than we sell to them, we are being taken advantage of. And I think this narrative is very dangerous and misunderstands what trade deficits are. Um, can you touch on trade deficits, the good, the bad, why we have them, why they're not going away, and why they should not have been a driver of tariffs?
yeah. This is a this is a complex one, but I think that the terminology around this is a little problematic in the sense that when people hear the word deficit, they think bad. It's kind of like when people, hear the word debt or liabilities, they think, "Oh, that's bad." And there's nothing inherently bad about a deficit or even debt necessarily. I mean, it's just these are flip sides of two transactions. And so to use the debt example, when you look at a balance sheet, well, you have assets and liabilities. Somebody holds the liability, somebody holds the assets, and like I have a big mortgage. It's a super low cost mortgage because I locked in a 2.5% interest rate. Is that a bad thing for me? No, it's actually incredibly accretive to my overall net worth in the long run. So debt can be really bad. Credit card debt, for instance, is almost all. If you don't pay your credit card bill every month, that's the worst kind of liability you can have because it's a high cost liability, typically 20-25%, and that's the sort of thing that it's unsustainable because you're not going to earn a return that is going to be in excess of that. Whereas with me and my mortgage, 2.5%. I'm beating 2.5% just by buying treasury bills right now. So it's like there's good debt and bad debt. And so you can't look at this and just say deficits are bad. And when you look at the trade deficit, well, the thing that you have to consider is that the flip side of that transaction is a capital goods surplus. And so we buy a lot of goods from the rest of the world. And so is it a bad thing that, we send pieces of paper to China, pieces of green paper that we can literally print as many of these things as we want, and we get real stuff in return for that. And who's winning that deal? Well, it's complex. I mean, on a basic level, I would say the person getting the real things is probably winning, but there's an extent, like the credit card example, where this could become unsustainable. Are you buying so many things from the rest of the world that this is an unsustainable balance sheet position or transaction? And we're nowhere near that sort of a situation. So to put real numbers on this, the example that I like to use is that the amount of goods that we buy from the rest of the world is, let's just call it roughly $1 trillion from the rest of the world. The domestic economy, our domestic income is $30 trillion. Okay, so domestically, we're buying $30 trillion of stuff from each other. We buy $1 trillion of stuff from foreigners. And the net worth of the domestic private sector is $200 trillion. Okay, so we have $250 trillion of domestic assets. That is one quarter of a quadrillion. Quadrillion. So these numbers are gigantic. And so I think the way to think about this is that, to put this at sort of a personal level, this is the equivalent of somebody who has $250,000 of assets. You have a $200,000 net worth. You have a $30,000 income, and you've convinced yourself that you're going bankrupt because you buy $1,000 of stuff from foreigners. And when you think of it like that, it's just the math, it makes no sense. And sure, there's a world in which this could become problematic where, say, if you were spending, if the amount you were buying from foreigners was $50 trillion, well, the math there is completely different. And that would be problematic. But the $1,000 or the $1 trillion that we're spending abroad is not it's not problematic at all. In fact, one of the reasons why we're so rich, one of the reasons why the assets are so valuable, is because a big part of what we're doing, we're not just buying paper plates from China. A big part of the trade deficit results from Apple is outsourcing the production of their iPhones to China, and those phones are being made by people at lower wages, where ultimately the value add of that is accretive to the domestic economy because the U.S. consumers have access to cheaper goods. Apple gets higher margins. Apple's stock price is higher. And so a lot of this in sort of indirect ways is it's actually accretive to our net worth in aggregate. So it's not like we're not just lighting money on fire and sending it to China or something. This is and that's another aspect of this, is that the money, in a lot of ways, the money comes back. China reinvests it back in the United States. And so it's not like this is like, some sort of scenario where we're just recklessly spending money abroad and, or lighting it on fire or something. This has been hugely, hugely accretive to the US economy over time.
Absolutely. Thanks for explaining that. One of the issues that I think so building on that, one of the issues I think COVID sort of laid out with our supply lines, with our supply chain, really, is that there are some things that take a long time to get here, and are needed. And in a world where, whatever, there's a virus, there's a war, there's a breakdown between two countries, we are at we have an issue in terms of national security.
Yeah.
I think we see this with Taiwan and in other, let's say, medical supplies, pharmaceuticals. The fact that we do not manufacture some of these things here, or at least in our hemisphere, feels like that could be an issue from a national security standpoint. But the country has addressed that to an extent with the Investment and Jobs Act and the CHIPS Act. But I think there is still this narrative going around, which I think makes sense, that there is some things that we do need to do here, from we need to have access to like medical supplies in the event that, China can't supply them to us, or it takes 120 days to get something. Um, can you address that, and also address the fact that tariffs, at least the way that we're implementing them, simply aren't going to bring those things here?
Yeah. Yeah, so this is one of those sort of tangential things that people have brought up in response to this as a justification for doing this. And it's a strange one in large part because the tariffs aren't going to fix any of these issues, or they certainly won't. Like a good example is China, for instance. China, for just natural resource reasons, has an exceptional amount of rare earth minerals. And so, like I saw a lot of people were talking about how, a lot of the materials that go into like the drones that we build here they're sourced from China because they're these rare earth minerals that you can almost only find in China. Or China produces something insane. Like they produce like 50% of all of the rare earth minerals in the world. The United States produces a minuscule amount, and there's a couple of other countries that are, relatively larger producers, but nobody comes close to producing as much as China does. And that's just, that's like Saudi Arabia having, this monopoly on oil to some degree, that they just, by virtue of sheer luck, they just happen to be the ones sitting on this big gold mine of a natural resource. And so, what's weird about the tariff debate is that, I look at this stuff and I say, well, if you were worried about a national security issue and you were worried about your ability to get these rare earth minerals that were so essential to building your national defense system, why would you go and piss off the one adversary that has access to all those rare earth minerals, and who just so happens to be the one that is most likely to end up in a war with you? To me, it's like it makes no sense again. Where you're like, no, if this was a real concern of mine, well, I would be on a plane to China in the midst of all this, and I'd be saying, hey, we need to work on a free trade agreement. We need to figure out a way to be better buddies in the long run, where we can, let's make this mutually beneficial. And oh, hey, by the way, let's also not, have to worry about killing each other in a, World War III outcome in the future. Whereas the escalation of all of this, it increases the odds of some sort of event like that, where you end up in a war with China or something like that, where we've angered them for no good reason. And, they respond in a way where they're going to say, not you guys are cut off from these minerals that you so badly have, told the whole world that you are dependent on now. And yeah, we'll make this adversarial for you. So it just, I don't know, it's another one of those things where it's like, you don't seem to have thought this through very well in terms of the knock-on effect of what will this do and what is the long run effect. And that's actually been one of the most frustrating things for me is, there's certain there are elements of the China relationship where I understand, okay, you have to tread carefully with this because they're not our friends necessarily. But the one that really irked me was like the Canadian tariffs. I was like, Canada, the example I use is that Canada is like they're like the one house in the neighborhood that, they bring you baked cookies every week. They're just the nicest people on the whole block. You kind of, the rest of your neighbors are kind of crummy. You hate them to some degree. And but can't the Canadians are great. They're the ones you love. And one day Donald Trump just woke up and was like, I'm gonna kick their door down and I'm gonna throw their cookies in their face and tell them they're a bunch of jerks. And it's like, why? What are we doing? Because I talk to a lot of Canadians and I can't even tell you the number of Canadians I've talked to in the last few months who have said, we're not buying anything from you guys. I'm not coming to your country. You guys, for whatever reason, you sort of spit in our faces unnecessarily. And it's like, it's such an own goal that was so unnecessary. And we did the same thing in a lot of ways to the Europeans who have obviously always been our allies. And a lot of this has been so unnecessary and contentious with people that we never had contentious relationships with, that the response to this, I hope it's not, in any way, excessively detrimental to our economy, but it's even on a relative basis, there's no way in which you can look at, the Canadians and, see that like travel from Canada to the United States has like fallen off of a cliff.
Yeah.
Like they're just not coming here because they're basically like we're not gonna fund that economy because they're a bunch of jerks. And that's just a scenario where it's like, okay, well, maybe this doesn't cause a recession, but even if it contributes to growth being slower than it otherwise would be, well, that's a bad thing. Like, why did we just do that?
My neighbors are Canadian, and they are the nicest people I know. We're great friends with them. My son is best friends with their son. My daughter is best friends with their daughter, and just they're just flabbergasted. They just don't get it. They feel like we've been so good to you. We're like North America. We're one, we aren't, yeah, we're two different nations, but like, why are you doing this? Like, it's just so weird. Um, I have dozens and dozens of questions for you, but we're not going to take up the rest of your day. I want to give you one last question that it might not necessarily be in your lane, but you did talk about it in your piece, and I do think it's relevant. I just don't think you're going to have an answer, but I want to hear your thoughts at least. And it has to do with social media. Um, this is mostly an economics topic, but many of these bad theories in your exceptionalism piece talked about this. Many of these bad theories that are being spread through social media on platforms that didn't exist 20 years ago, and being boosted by algorithms that didn't really have a we've never really seen before. I don't know the answer to how we combat this. But the amount of misinformation, especially as it surrounds, I mean, I literally saw Americans just saying things that were just so wrong. And like, yeah, like you said, our income tax is going to be replaced by tariffs. Manufacturing is coming back to none of these things are going to happen, but they are 100% certain that they will. And social media is just exploding with these types of people, not people like you who know what you're talking about. What do we do?
Oh boy.
Yeah. Uh, this
I
is just
don't.
crazy.
It's interesting because I've watched this, I feel like, get worse and worse with time because I came out of the financial crisis, and I mean, one of the only reasons anybody knows who I am is because I came out and I was saying a lot of things that were very counterintuitive to what the common narratives were. Like, people came out of the financial crisis saying that quantitative easing was going to cause hyperinflation and interest rates were going to soar and everything was going to hell in a handbasket. And I came out sort of saying a lot of the opposite things. And I spent a lot of the 2010s trying to argue that, I mean, it was a period that I called the era of irrational apathy, where people were sort of downtrodden over everything that was going on, but actually things were were much better than we were giving it credit for. Not that the financial crisis wasn't devastating in lots of different ways, but as we went through that 10-year recovery, that was a really good period for the US economy. It was a period of low growth and low inflation, but everything was very stable. And the COVID obviously sort of changed the whole dynamic in a lot of different ways. But I think a lot of this stems from God. I mean, you can go back to 9/11. A lot of this is just I think the eroding trust in institutions, and that kind of started with 9/11, and then the financial crisis compounded it, and then COVID. I mean, holy cow. I mean, COVID. And I disagreed with so many things that happened during COVID. I think I wrote in that exceptionalism piece about I was out on a track one day doing track workouts during COVID, and there was nobody around me. Literally, I'm the only person on the track, and a police officer rolled up. I saw this police car roll up next to the track, and this cop gets out and he walks over and he tells me I have to go home. I was like, "Are you serious, man? I'm the only person here. I'm trying to take care of myself. We're all trying to be healthy." He was like, "Yeah, you're endangering the public." I was like, so I think the public response to so much of this was so bad that there's been this like incredible erosion in public institutions and trust in general, and social media has amplified all that stuff. But also, it's especially dangerous with the economic stuff, because this economic stuff is so complex. I mean, and there are shreds of truth to, the idea that the trade deficit could be bad, or, we don't produce the rare earth minerals here that are needed for national security. There's truth to a lot of these arguments, and enough truth that I think people are willing to look at that and say, well, you know what? This system that we've got in place hasn't worked that great for me. So I'm okay with Donald Trump just, flipping the whole chessboard and, trying a whole new path forward. But the economic stuff is dangerous because the economic stuff is so complex that you get into, I mean, God, with trade deficits, you get into, I don't know, I would be shocked if 80% of Americans can even explain, a deficit in the first place. Just the
Right.
basic concept of the word and the way that it relates to a capital goods surplus and things like that. So you get into these, and that's very basic economics. And you get into really complex aspects of this, like the current account deficit, which is the total monetary flows of everything, the capital account, and then foreign exchange rates. I mean, I've been doing this for 30 years and I still forget how foreign exchange rates work sometimes. Like,
Yeah.
so I mean, you're talking about a really, really incredibly complex topic that a lot of the professional economists don't fully understand. And so the ability to create really creative and smart sounding narratives around this that are in a lot of ways just sort of fear mongering or politically biased narratives that are intended to just sort of promote, a certain political perspective is really easy. And I've seen it get much, much worse with the last 15 years. And I don't know. It's hard to see this getting better. I mean, in part because, I mean, God, like with AI, like,
Yeah.
I mean, that's all going to make it worse because it's going to be so much easier to just produce this content, and it's going to become even more convincing because, I mean, somebody tomorrow could create a video where, Cullen Roche is out saying that tariffs are great and it'll look totally convincing.
Yeah.
And yeah, I see these videos all the time now where I'm like, I can't tell the difference between that's got to be fake because that person would never say that thing, but it looks 100% real. So I don't know. I feel like it's all going to get worse. Sorry.
I don't disagree. I was just hoping that you had an answer to save us from it all, Cullen.
I wish there was a good solution. It's I don't know, a lot of the solution going forward is that we more than ever, I think we need the political system to sort of straighten itself out to a certain degree where we don't have these really big extreme swings in the way that the parties are in control, because that's what's been happening to a large degree in the last 20 years, is that you get these big swings where one party gets control, they do something that the other 50% of the country disagrees with, and then you get a pendulum swing where then, it swings the other way, and then the other party gets full power and they do something that, like tariffs, that the other side all looks at and says, hey, well, this is stupid. We just totally disagree with this and this whole mentality. And you get this pendulum swing where, people basically, rather than, I mean, the whole American system was designed to have these checks and balances where people, to a large degree, were forced to find common ground, to agree with each other, to look at their neighbor and say, okay, why are you mad? And what can I do to try to find common ground with you where we'll both be a little happier without us, only one of us getting everything that we want and the other person just, feeling like they, vindictive, like they need retribution. And so I think our political system to some degree needs to write itself out in a way where we're sort of forced to find more common ground rather than these huge pendulum swings that we've been seeing over the course of the last 20 years. And so unfortunately, that doesn't look like it's going to happen either, but
No.
Colin, I could not agree more with that recipe. More bipartisanship, anything that turns down the temperature, I think would be very welcome. Cullen Roche, we cannot thank you enough for your knowledge, for your time, and we cannot wait for the next conversation.
thanks for having me, guys.